Welcome back. You tune into Market Fatafat, where we are taking you through all the stocks that are buzz in trade on the back of technicals and on the back of news flow. On the technicals now, we are joined by Sameet Chavan, who's the head research, technical and derivatives from Angel One, and from our research team, we are joined back by Aisha. Hi, good afternoon to you both. Let's get started yet again with all the stocks. Sameet, you picked out L&T for us. Now, L&T is a stock that has really started moving up in the last 1 month, 4 odd weeks. Tell us, in fact, 12, almost 13% gains coming in the last 4-5 weeks for L&T. What is the upside for this counter now?
Good afternoon. In fact, most of the gains have come in last couple of trading sessions itself. Stock has already rallied from the important support level of 3480 odd level, and it has surged quite a lot in the last 2 days. If you look at the volume activity, it has if you look at the overall volume activity, it has surged a bit. So overall volume and price combination certainly looks quite promising for this counter, and hence you will not be surprised to see the stock even heading towards 3840, 3880 kind of mark in probably next 2 to 3 trading sessions.
All right, moving on to the next counter that is in focus today, Adani Ports. And Adani Ports is in focus today on the back of the fact that it has been given a negative rating. Let's look at what the company has to say. It's S&P Global, the rating company has revised the outlook for the company to negative from a positive and reaffirmed the ratings at BBB minus. In fact, the company says that because of the potential impact across the wider Adani group, they have revised the negative outlook for Adani Ports, and also they have reaffirmed the BBB negative rating on these entities. And on the back of that, Adani Ports is in focus today. But nonetheless, Adani Ports, in fact, all the Adani counters post that win coming in from Maharashtra. All the Adani Ports have been recovering since Friday. Adani Ports is also up right now with with gains of 3.3%.
Okay, so gains coming in on the stock despite a negative news flow coming in from S&P Global. But let's talk about another stock that's been gaining away in today's trade. There's been no stopping for this one, and that is Zomato. Now, the stock is gaining on the back of two triggers: the company's inclusion in the 30 stock BSE Sensex and its approval for its 8,500 crore rupee QIP. Now, Zomato is the first new age tech stock that will replace JSW Steel in the BSE Sensex as part of the index reconstitution, which will come into effect from December 23rd of this year. The food delivery platform's entry in the 30 stock index comes amid a stellar rally seen in the counter during the last 12 months, wherein Zomato has surged 126% so far on a year-on-year, on a YTD basis. On the other hand, JSW Steel shares have given only 10% return during the same period. Now, shareholders have also given Zomato a green light to its 8,500 crore fundraise via the QIP method. And earlier in October, the board of Zomato had also approved this fundraise to bolster its balance sheet as well. So, two positive news flows coming in. One, the inclusion in Sensex, and the other one is fundraising coming in of 8,500 crores. Stock up almost 5% as we speak.
All right, moving on then. Ansh, you've picked out Aurobindo Pharma for us. Tell us what's the news flow here.
Yes, so the company's US arm, which is a wholly owned subsidiary of the company, has entered into a collaboration and license agreement on 22nd November actually with a global pharma major for development of specific product across respiratory area and their commercialization as well. If we talk about payment, then an upfront payment of $25 million will be done on effective date of this agreement. Post this effective date, the development cost will be borne by both the parties equally with an over or cap of around $90 million for Aurobindo. Now, a cost sharing arrangement has been agreed by both the parties, with each of them contributing 50% of the cost incurred, with an overall cap which mentioned of $90 million for especially Aurobindo over the development period. Also, if you see on chart, then stock has actually given a correction of more than 20% from its September highs, and currently the stock is trading in an oversold region with RSI of just 24.
Okay, so Ansh, that's the reason why you picked out that stock, but let's move on. And Sameet, you've picked out ONGC for us on the charts. Now, tell us what are the levels that you are spotting for this one, and what are the key levels to watch out for? What's your outlook, at least going on the charts going ahead?
See, overall, if you see, ONGC has corrected quite sharply from the levels of 30, 345, 350 in last 1.5 months. Stock was quite oversold, and
All right, we seem to have lost Sameet. We'll get back to him on ONGC, but let's move on to a stock that is in focus today, and that's UPL. That's trading with gains of 1% right now. They have signed a strategic partnership with CH4 Global to bring the latter's methane-reducing feed supplement to millions of cattle per day. Also, there has been a revision in the credit ratings by CARE Ratings on the long-term bank facility from a negative to a stable, and the long-term bank facility rating has been downgraded from CARE AA Plus to CARE AA. On the back of this news flow, UPL is in focus today, currently trading with gains of 1%. It has given up those morning gains, but nonetheless, it's up 1%.
Okay, so that's the reason why UPL is in focus. Let's also talk about another stock that's in focus, and that's Cochin Shipyard. Now, Cochin Shipyard gained after it entered into an MOU, which is a Memorandum of Understanding with Cetrium Letourneau USA Inc., which is also known as SLET, for the design and critical equipment of jack-up rigs for the Indian market. This partnership aims to capitalize on opportunities for mobile offshore drilling units designed to meet the needs of the Indian market by building on the company's extensive experience in ship construction as well as engineering and SLET's renowned technical expertise and design capabilities. This is what the exchange filing says. So positive news flow coming in, and the stock has been locked in upper circuit of 5% since quite some time now.
All right, with that, we are back with Sameet. Sameet, hi, you're joining us back. Now, you had picked out ONGC for us, and you were talking about ONGC. In fact, it's up and away almost 5% in trade today. But last 6 months, it has been in a corrective phase. Tell us from here on, where does it go?
This stock has already corrected from the levels of 345, reached its sacrosanct support zone, and since morning the stock has been buzzing with sizable volumes. There's only one challenge, we are not far away from that challenge, which is 20-day exponential moving average placed around 260. Once this stock, traverses this important resistance zone and sustains above it, then we could see a good short covering move in this counter, and then the stock can give a decent rebound toward 275, 280. At least with a short-term view, at least with a momentum perspective, the stock can give a decent bounce back. But overall trend, remains on the negative side. So any, decisive move towards 280, 290 is likely to get sold into. So as of now, for a momentum perspective, yes, one can certainly look the stock for another bounce of nearly 5 to 7%, toward 275.
Okay, so 275 on the upside is the levels that Sameet is spotting on ONGC. Ansh, you've picked out Astral for us. It's on the back of a brokerage note, and the stock is also holding up 1.5%. Tell us what the brokerage note has to say.
Yes, so Goldman Sachs has come up with a report on whole pipe sector actually, but mainly on Astral, because they have maintained a buy rating on the stock, but they have cut the target price to 2170. Now currently the stock is trading at around that 1800 level, so more 20% on upside here. According to them, margin and volume growth has bottomed and a recovery is likely possible now. Also, the channel checks suggest inventory is still relatively stable in November, despite end market demand from RE showing a pickup actually. Apart from this, China PVC prices remain subdued, pointing to a more gradual margin recovery for the pipe sector overall. And especially Astral is exhibiting a good pricing power and margin discipline here. Also, if you see on chart, then the stock seems to have given a good breakout from its 7-session consolidation pattern. In addition to that, the stock has also surpassed above its 20 DMA level. For those reasons, the stock is in focus today.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. We're coming back after the break with some more stocks that are in focus.
Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus today. And Sameet, on the technical front, you've picked out L&T Technology Services, L&T Tech. So tell us what's the outlook going ahead, because last 6 months the stock has given roughly 17% gains, but YTD basis the stock is up barely 5%. So it seems like all the gains are rather recent for this stock. Tell us, do you expect this momentum to continue going ahead, and what are the levels that we should be spotting for this one?
Clearly, recently the stock slipped into a consolidation mode, but the kind of price action that we witnessed on Friday and today, the kind of follow-up that we are seeing, we can see a breakout happening on daily time frame chart from the pattern which is called as inverse head and shoulder, and it's a bullish pattern where if we look at the RSI momentum oscillator formation, it suggests that there's some sort of up move is likely to unfold in this particular counter. As far as levels are concerned, 5750, 5800, these are the next important levels to watch out for. Stock has already given a breakout from its neckline level of 5300, and any follow-up move can certainly drive this stock towards 5800. On the lower side, 5280, 5200 is likely to seen as a very strong support.
All right, moving on to the next counter then. HDFC Bank is in focus today. In fact, in early trade today, Reliance and HDFC were contributing the most to Nifty's up move, but HDFC is in focus today, trading with gains of 1.4% right now is because the MSCI rebalancing that takes place today for changes that were announced earlier this month from HDFC Bank to 5 other stocks will see inflows worth close to $2 billion. The MSCI small cap index will see some 13 odd additions and 7 deletions from the index, but overall the Indian stock market may see an inflow worth $1.7 billion today. HDFC is likely to see the second tranche of its weightage increase on the MSCI Global Standard Index. The Nuvama Alternative and Quantitative Research anticipates inflows worth up to $1.8 billion in the share of India's largest private bank, which is HDFC. And HDFC Bank is also in the final stages of assessing almost 12,372 crore rupees car loan portfolio, its second such transaction in 2 months, as the bank seeks to bring down its credit deposit ratio, or the CD ratio. On the back of these two news flows, the HDFC Bank is in focus today, currently trading with gains of 1.4%.
Okay, so that's HDFC Bank, good gains coming in on that front. Let's talk about another stock that's doing pretty well, in more than 4.5% gain, rather close to 5% gain coming in on this stock, and that's Rail Vikas. Let's understand why the stock is in focus today. They've announced on Friday that they've also received a letter of acceptance, which is the LOA, from the Eastern Railway for earthwork in cutting and filling, blanketing, construction of minor and major bridges and other ancillary work between the Kalipahari and the Pradhanakunda railway stations. The order has to be executed within the next 16 months, and the total order is valued at 837 crores. It's a big order when coming in for RVNL, and this is what the company has said in their exchange filing. Now, this order awarded to RVNL is in consortium with SCPL, in which RVNL is the majority shareholder with a 74% stake. So it's a joint venture between RVNL and SCPL that has backed this order win. It's a significant amount, 837 crores coming in, and that stock is gaining with trading with gains of more than 4% as we speak.
All right, moving on then. CESC is the name that you picked out for us. Ansh, tell us what's the news flow here?
Right, so the company has received a letter of intent for acquiring 100% shares in a distribution company which is responsible for distribution and retail supply of electricity in the Union Territory of Chandigarh, and the amount for this contract is 871 crore. Now, the time period by which the order or the contract is to be executed is within 30 days of the issuance of this letter of intent. Also, if you see on chart, then the stock was up by more than 5% in morning, but then due to market pressure it is corrected a bit, but still it is holding on to that gains of around 1.5%. And in addition to this, the stock has been advancing for third consecutive session now, on the back of which the stock is in focus today.
Okay, so CESC in focus on the back of that news flow. Sameet, you've picked out NALCO for us. Now, when I take a look at the chart for NALCO, if you pull up the last 6 months of NALCO, it's a good 28% return coming in. And it's been looking good on the charts year to date, also more than 80% return. Do you believe that this rally that the stock has seen, this run up, is expected to continue going ahead, or can we now expect a period of consolidation for the stock?
In fact, this has been one of the rank outperformance within the metal space, and in fact, if we compare it with the broader market performance, this stock has been moving upwards. Unfortunately, since morning, we are seeing a good bout of profit booking in this counter, and the kind of price structure that we are seeing on daily time frame chart, it suggests some sort of profit booking or consolidation is on the card. Price wise or configuration wise, we can see an engulfing bearish pattern getting confirmed on daily time frame charts, which suggests some sort of profit booking is likely, which would then be followed by some sort of time wise correction as well. So 260, 262 is likely to act as a very strong resistance, and on the lower side, in case the profit booking extends, 230, 235, these are the next levels to watch out for.
Alright, moving on from NALCO to Aisha Motors, which is in focus today on the back of a new launch. They have launched a new Goan Classic 350. Now, this was launched in Goa at Motorverse. The motorcycle is now available in 4 vibrant single and dual toned colors, priced at 2,35,000 rupees and 2,38,000 rupees respectively. And on the back of this new launch, Aisha Motors is in focus today, trading with gains of 1.2%.
Okay, so Aisha Motors, good gains coming in. Let's talk about NTPC now, and this is on the back of a brokerage note coming in this morning. You have the global brokerage firm Bernstein that's maintained their outperform rating on this stock, and they've set a 12-month target price of 440 rupees per share, which implies a potential upside of nearly 20% from the stock's closing level on Friday. Now, in its note, Bernstein has highlighted that the core investment thesis is supported by rising power demand, easing energy shortages, and NTPC's advantage in the entire cost of debt space. The foreign brokerage firm mentioned that while there may not be significant drivers for a further upside, there is little reason to expect a downside either. So, pretty neutral. So, they've maintained their outperform rating on the stock with a target price of 440 rupees, and the stock is up 1.6% as we speak.
Alright, moving on then, let's move on to Sameet for Infosys. Sameet, tell us what are you seeing on the charts for Infosys? I mean, we spoke about the IT pack in the first segment. Tell us what are you seeing on the charts for Infosys?
See, on Friday, this stock gave a promising move and moved beyond its recent resistance of 1870 on a closing basis. Unfortunately, we did not see the follow-up move today itself in such kind of positive market sentiments. But overall, if you see with Friday's move, stock has already broken out from a bullish cup and handle pattern. So today's move can be construed as a pullback or a time-wise consolidation before it leaps towards 1950, 1980. So as of now, till the time the stock remains above 1800, we would continue with our positive stance in this stock, and 1950, these are the next important levels to watch out for.
Okay, so those are the levels to watch out for on Infosys. And Ansh, you've picked out Zaggle for us. There's a news flow that's coming in for this counter. Tell us what it is and tell us why the stock has been reacting the way it is.
Right, so the company has entered into agreement with this Golden Jasraj Music Platform Private Limited to launch a co-branded prepaid card, which is a cultural and tourism prepaid card. Now, this is mainly for corporate customers actually. The contract term for which is 3 years. Also, if we see on chart, then the stock was in the morning up by more than 2%, but due to market pressure, the stock has corrected and currently it's trading with a loss of 2% currently.
Alright, with that, we have come to an end of this show. Ansh, Sameet, thank you so much. Lakshmikant, who joined us in the first segment, thank you so much for taking the time out and joining us. With that, it's a wrap on this edition of Market Fatafat. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere because closing trades is taking the market action forward.
If you like this video, then like, share and subscribe to ET Now.